What's going on, YouTube? It's Jake Claver back again with the Block Biz. Today, I'm going to give you guys an insight into what I think is going to play out in the macroeconomic environment moving forward. This is not something I've heard discussed anywhere else, and so I wanted to bring it to you guys on here and get some feedback, see what you thought about it. So where do we even start? We're currently at the end of a long-term wealth cycle, and there's going to be a revaluation of currencies, which happens every time. And it normally happens through a systemic event. In the past, it's been world wars. Bretton Woods was the result of the last one of those, 1944. We had the majority of the gold here in the US, and we pegged the dollar to gold, and then everybody else pegged their currencies to the dollar in specific ratios. We didn't have free floating exchange rates like we do today until 1971, when Nixon closed the gold window on August 15th temporarily, which has never been reopened. And so since then, we've had floating exchange rates, and we've been able to print money basically endlessly with repercussions, but we're coming to the end of that rope. But at the same time, I would argue that you need debt expansion and credit in order to expedite the growth of an economy, which we've experienced over the last 50 years. So this is what I see happening moving forward. We'll have two systems. There'll be wholesale CBDC back-end settlement for financial institutions to stabilize markets that will be backed by collateral. And the front-end retail version will continue to expand. And I'll explain why. And this could be done two ways. That they could revalue assets significantly higher that are the collateral for the back-end system, and also use that as the front-end system. I have my thoughts about that, and maybe we'll get into that on another video. But they'll use gold and oil and other energy resources as the collateral with stabilized pegs. They'll back CBDCs or stable coins issued by the treasuries of these different countries or the central banks of the different countries with that collateral. And again, that'll stabilize the debt market on the backside of things after they revalue those assets significantly higher. And on the front end, what I was going to get to before was the technological advancement over the last 50 years. Technology is deflationary. So on average, everything should get about 7% cheaper every single year. Technology makes things more efficient. It makes things faster. And it makes things cheaper to produce. So we've had to inflate the monetary supply to keep a 2% inflation rate by 9% year over year, just to hold that peg. And I'll give you the reason that they shoot for that 2% goal is prior to 1971, that was about the amount of gold they could mine each year. It added 2% to the supply that existed for gold. And so it slowly allows the economy to expand over time in a stable way. And so that's why the Fed's mandate has been to target 2% inflation over the last 50 years, while also dually trying to keep employment at a good level, at an acceptable level, which is a difficult task to balance both of those. So back to the deflationary effect of technology. I expect that with the advent of blockchain smart contracts and the convergence of all the other technologies that are advancing at a significant rate because of private equity and venture capital and angel investing and all the other things that exist, hedge funds, they allocate capital to new companies to help them start up and advance their R&D and all those things. we're going to see a boom over the next decade and even 50 years in technological advancement. And it's going to have a significant deflationary effect on the cost of goods. So you would also need the ability to inflate the currency to offset that deflationary effect in order to hold price stability for things so that people can make plans. If you had a wild swings in prices of things, which we've seen since the pandemic happened over the last 2 years, it makes it very difficult to plan for things. It makes it difficult for people to save money. It makes it difficult for people to make long-term decisions. Purchasing a home, building a business, you need a certain level of stability in order to do that, and expected stability. So like the 2% inflation rate. So with the advent of all these technologies and the significant deflationary effect that that's going to cause, I believe it will accelerate significantly faster than just the 7% that we've experienced over the last few decades, potentially 20 to 30% a year in cost reduction because of the deflationary effect of these things as they're implemented into the economy. And with that, again, they will need to expand the monetary supply in order to offset that with inflation to stabilize prices so that people can make plans. And that's why I believe there'll be two systems. I believe the front end system will still be not collaterally backed. And if it is, again, they'll have to revalue things significantly higher than they are today. Gold would have to go from what it's traded at this morning, I think was around 1,700 at the open. It would be revalued in steps. I don't think it would be in one big jump, but potentially up to $50,000 an ounce to cover the spread and the necessity for them to continue to expand the monetary supply to offset the deflation while having stability in the market. And we'll see how it plays out. But that's why I think there'll be two systems. I think there'll be one system that's a wholesale CBDC back-end settlement system for financial institutions that stabilizes markets, potentially the derivatives market in the long term. And there'll be another front-end settlement system that's not collaterally backed and issued by the central banks. They'll be able to continue to print and bring in UBI to help people, which is universal basic income. We saw them basically exploit the flaws in the system that currently exist during the pandemic when they sent out relief checks to people. And everybody loved the relief checks, right? If you made under a certain threshold here in the US, and I know globally that happened as well. They're going to continue to do that. And it's going to be in a structured way. And all of your banks have already implemented these digital wallets into your accounts. I believe that they'll be directly tied to the Federal Reserve or the central bank or the Treasury, one of the above moving forward, and they'll be able to send aid directly to the people with that by bypassing the intermediaries, which were the banks before, which they're for profit, right? So they're not going to loan it out unless they believe they're going to get it back. And they can also incentivize spending in specific portions of the economy with digital currency. So they can program it. And if you had the reason that the Soviet Union failed was they weren't able to allocate funds appropriately, like happens in a free economy. When there's arbitrage in a free economy, somebody comes in and exploits it. They'll buy cheap and sell high until that gap's filled. And when you have socialism, that doesn't exist. Everybody's paid the same, and there becomes discrepancies in the economy, and then over time, things will collapse. But if you had the visibility for all the transactions, you could use an AI to analyze all those transactions. And I know this sounds like a dystopian future, but hang in there with me. You could use an AI to analyze all those transactions and then allocate the money that you're giving to the people in specific sectors of the economy that would be the most advantageous, right? You could say, The wheat manufacturers are losing money over here, and some of these farmers are about to go out of business because of it. We need to incentivize the consumption of wheat to drive the price up, so that they can make more money and stay in business. And, we continue to be able to farm the land over here. They do this now with some subsidies and some different things already. But they could do that with everything if you had a full visual of the economy and all the transactions that were happening within it. So then you have the side of anonymity, which people don't want you to know their transactions. I happen to know a gentleman that runs a business. Well, he doesn't run a business. He's director on the board of a business that has all of the medical data of everyone in the US. They just don't have names tied to it. And they sell it to actuaries. They sell it to other people in the pharmaceutical industry. They sell it to other people doing research for pharmaceuticals and other products. Anybody that might want that information, but they don't have any names tied to it. And I think it would be similar for this aspect. There wouldn't be specific individuals tied to these transactions. You would just have a visual of all the transactions that are happening and allow an AI to analyze that. So you don't know who bought what, but you know what was bought and how much of it and what was spent and the discrepancies in the economy. And so this would also be able to be used for social programs, which I think are great. I think we need to have some things like that in place. People fall on hard times and don't have backup savings, especially right now. There's a lot of people without any backup savings, and they've run their credit up. So we've got a lot of people in poor positions. But with the UBI, with food stamps, with other social programs that are put in place, you could make sure that the money was being spent on what it was supposed to be being spent on. There would be no trade your food stamps for money and buy drugs with it, or other things that exist in the economy today. The tax dollars that our government is taking from us would be allocated appropriately. It'd be much more difficult to take advantage of the systems with the advent of digital currency. So it's not all bad. And I think it can exist in a way where privacy is maintained and we get all the benefits. And so everybody thinks we're headed for this dystopian future, or we're going to get Nasara Jasara and the world's going to be a better place. I tend to believe that we'll fall somewhere in between, just like the world we live in today. There's good and bad, and technology can be used for good and bad. So I think that's probably what's likely to happen here. And with regulations moving in for digital assets, especially for the first piece that's going to be regulated is the financial system, stable coins, bridge currencies, all that stuff will be here shortly. And with that, I think things will progress in this manner. And with the deflationary effect of those things, again, they will continue to need to print currency to offset the deflation that we've experienced, which most people believe we've had, hyperinflation, or we're on the verge of hyperinflation. And I think this is also why, if you quell demand, if prices get too high, people stop buying things because they can't afford it, because the wages haven't kept up with the inflation that's happened also. And so you need that stimulation of the UBI to be brought in to continue to stabilize and grow the economy. 70% of the economy here in the US is consumer-based. We're a service economy. We've hollowed out our manufacturing. And another component of this will be manufacturing moved back here to the US, because the dollar will no longer be have the supremacy that it's had for the past since 1944, like I explained at the beginning of the video. There's Triffin's dilemma. So if you don't know what Triffin's dilemma is, it basically says you'll hollow out your manufacturing and ship it overseas because those other countries need your currency to purchase energy resources and buy commodities so that they can subsist and grow their economy. And they will trade their goods that they produce in those economies to you for that currency. So over time, it'll be significantly cheaper to produce goods overseas. And eventually you have the fall of an empire, which is where the US is now. We're at the end of our rope on the dollar being the reserve currency. And I think it will continue to be a reserve currency. I think we move toward a multipolar world, but it won't be the liquidity that exists for the world anymore. So that's my theory. I think we've seen the significant inflation. I think they front run this some because they know there's a significant deflationary event on the horizon with the advent of these technologies, and they will continue to print money on the front end and give it to people as universal basic income is brought in direct from the Treasury or the central bank to consumer in order to then incentivize them to spend that in specific portions of the economy that's going to stimulate the growth or fix the gaps that are being analyzed. And I think it'll be a good thing. I think it would help a lot of people to have a standard of living, have their bills paid, be secure, because you can't move up Maslow's hierarchy of needs until the first layer is met, right? So you can't get to emotional stability and those other things until your basic needs, water, shelter, food, are even met. And you really can't reach purpose until you've climbed all of the different levels of the ladder. So if we gave people stability and they had some money that they knew they were going to get every month, and it could cover basic expenses, even if they were chosen expenses by the government, then that would allow people a little bit more freedom. We could see a renaissance period where people became very creative. A lot of changes, a lot of good things could occur from it. So it's not all gloom and doom. I think we're headed for a better place with the advent of digital currency and blockchain and Web3 and all these technologies converging at once. I think it's going to be a renaissance period. They've called it the fourth industrial revolution. And I think it will change a lot of things. Some people don't like change, but it's the only thing that's inevitable in your life. So I hope you're ready for it because it's coming. And with that, we'll see y'all on the next one.